Let's start by introducing Vijay Kedia, a renowned Indian investor celebrated for his knack in spotting multi-bagger stocks. Over decades, Kedia has built a reputation for his disciplined approach and unique strategies in the Indian stock market. His investment journey is filled with stories of patience, research, and conviction. Today, we'll explore his famous SMILE formula, a method that has helped him discover some of India's most successful companies long before they became household names. Understanding Kedia's background sets the stage for appreciating the wisdom behind his strategy. SMILE formula is more than just a catchy acronym. It's a structured investment strategy. Developed by Vijay Kedia, SMILE stands for small in size, medium in experience, large in aspiration, and extra large in market potential. This formula guides investors in identifying companies with the potential to deliver extraordinary returns over the long term. By focusing on these four pillars, Kedia has consistently found undervalued gems in the market. Let's break down each component to see how this formula works in practice. First letter stands for small in size. Kedia believes that small cap companies often have the most room to grow. These are businesses with a relatively low market share, operating under the radar of most large investors. By identifying such companies early, investors can benefit as these businesses expand and capture more of their markets. The key is to look for firms with solid fundamentals and scalable business models, even if they're not yet industry leaders. This approach opens the door to significant upside potential. Small cap companies are often overlooked by institutional investors, making them fertile ground for those willing to do the research. These businesses can grow rapidly, especially if they operate in niche sectors with little competition. Kedia's strategy involves finding such hidden gems before they attract widespread attention. By investing early, he positions himself to ride the wave of growth as these companies scale up. This is a classic case of high risk, high reward, but with careful selection, the rewards can be substantial. Next, M stands for medium in experience. Kedia looks for management teams that are neither too new nor too entrenched. Ideally, these leaders have about 5–10 years of experience, enough to prove their capabilities but still hungry for growth. This balance ensures that the company benefits from both fresh ideas and a solid track record. Such management teams are often agile, open to innovation, and motivated to take their business to the next level. Strong leadership is a cornerstone of Kedia's investment philosophy. He believes that a company's future is closely tied to the vision and drive of its management. Teams with medium experience are often ambitious and willing to take calculated risks. They're not bogged down by tradition, nor are they inexperienced. This sweet spot allows them to adapt quickly to market changes and pursue aggressive growth strategies, which is crucial for long-term success. L in SMILE stands for large in aspiration. Kedia emphasizes the importance of ambition within a company's leadership. He seeks out businesses where the management has a bold vision and is committed to scaling up. This drive to think big often translates into innovative strategies, expansion plans, and a relentless pursuit of growth. Companies with large aspirations are more likely to break out of their current mold and become industry leaders in the future. Ambition isn't always easy to measure, but Kedia looks for signs like aggressive growth targets, willingness to invest in new technologies, and a clear roadmap for the future. He pays close attention to how management communicates its goals and whether it consistently delivers on promises. Companies that set their sights high and back it up with action are the ones that often outperform the market over time. Finally, E stands for extra large in market potential. Kedia targets companies operating in sectors with vast long-term growth opportunities. This could be due to structural trends like India's push for manufacturing, digital infrastructure, or rising consumer demand. By focusing on industries with a big future, he ensures that the companies he invests in have room to expand for years to come. This long runway is essential for compounding wealth over time. Spot extra large market potential. Kedia analyzes industry trends, government policies, and consumer behavior. He looks for sectors that are poised for rapid expansion, such as technology, infrastructure, or specialty manufacturing. By aligning his investments with these trends, he increases the likelihood of finding companies that can grow exponentially. This forward-looking approach is a key reason behind his long-term success. Kedia's strategy isn't about quick wins. Instead, he believes in holding fundamentally strong companies for the long term to harness the power of compounding. By staying invested in businesses that continue to grow year after year, investors can multiply their wealth significantly. This patient approach requires discipline and conviction, but history shows that it often leads to the most rewarding outcomes. One of the best examples of the SMILE formula in action is Adel Auto. Kedia identified this company when it was still a small player in the auto sector. Over the years, Adel Auto expanded its market share, driven by ambitious leadership and a growing industry. Investors who followed Kedia's lead and held on for the long term saw impressive returns as the company matured and scaled up. Zira Sanitaryware is another success story. Kedia spotted its potential when it was still a niche player. The company's management had a clear vision for growth and operated in a sector with rising demand. Over time, Zira Sanitaryware became a leader in its field, rewarding patient investors with substantial gains. This case highlights the importance of aligning with companies that have both ambition and market opportunity. Aegis Logistics is a classic example of the SMILE formula at work. Kedia invested when the company was still small but had a management team with the right experience and big aspirations. Operating in a sector with massive market potential, Aegis Logistics grew steadily, delivering impressive returns to long-term investors. This story underscores the effectiveness of Kedia's approach in identifying future leaders. Sum up, Vijay Kedia's SMILE formula is a powerful tool for identifying multi-bagger stocks. By focusing on small companies with strong fundamentals, experienced yet ambitious management, and operating in sectors with vast potential, investors can position themselves for long-term success. The formula's track record speaks for itself, with several notable success stories. Remember, patience and conviction are essential to truly benefit from this strategy.